Okay guys, welcome to part 2 here. Now in this video we're going to just look at one quick example here. I'm going to go over some of the basic application here. Then in the next video we'll dig into the parameters, and then we'll go through a series of examples of how this could be nicely fit into what you're already doing in the markets, perhaps augment some of the tools you're working with now, or if you're particularly drawn to it, might be something you could trade exclusively. Many people do. So I have in front of us here, this is just the May crude contract. I've got a 1 minute up here, and on the chart, as I always do, I have our initial balance indicator just to kind of frame the day, so we get a beginning, middle, and an end. I have our toolbar up at the top. I'm going to be grabbing some tools from that, some that are particularly useful for this approach. And you'll see me grab those as we work through some examples here. I have the indicator applied here, but before we do it here, I just want to make a couple of points. So of course, the crude's been incredibly volatile, so this is I chose this quite deliberately because there is such extreme swing structure here. But first note, of course, you could go through this yourself, and you could just mark off all the breaks of structure and the change of character, and certainly one option. Now, of course, infinitely more efficient to just let a piece of software do that for you. Now, let me push this off here. Now, I've applied the indicator here to this 1 minute chart. Now, one thing you'll note right off the bat, I have only the breaks of structure, no change of character yet, because I just wanted you to focus on this piece first before we start adding components to it. So here, this is just Sunday night coming into Monday. You have, of course, plenty of volatility. So, you can just see here, no surprise here. Remember, we're defining a trend through breaks of structure. So from this low here, we come from downtrend to uptrend here, multiple breaks of structure on the way up, then we come down, multiple breaks of structure coming down. Now as we come into the day here, note here, this is not a close beyond that pivot high, so that is not the break of structure. It's not until right here when we get through and we actually get multiple breaks. So here's 1, 2 breaks of structure as we go into the open. Here's the open Monday morning, and immediately we go into 1 and 2 breaks of structure. So we go from uptrend to downtrend, and then here's the first break of structure. Now it's a long way to get to the next high. It doesn't come in until we get that second break here. So we go from up, down, up, down, up, down, down, up into the open here. So setting our initial low. Now, of course, right off the bat, something that you'll notice that perhaps your eye was drawn to here, I'm in this downtrend here, so I've had 1, 2, I get this. Now, if the trend was going to continue, this would have been another low here, but we don't. We get a higher low that leads to this, which leads to the break of structure. So this area right here, your eye should be drawn to. Well, hey, wait a minute, something happened there. Yeah, we'll get there, but I just want you to see that distinction between breaks of structure, how we're defining the trend. Also note over here, the indicator is always going to give you a reference to the most recent swing structure. So the most recent thing happening over on the right edge of the market here, we've got 1 and then 2 breaks of structure. So we know this is a downtrend. Here is the swing structure defined by the last pivot high and low, and we're retracing in that. Now, so I'm going to apply the indicator here. I'm just going to go over one here, and here you have it with both change of character and the breaks of structure. So that same section we were looking at down here, where all of a sudden we didn't get the lower low, we came back the other direction, that is a change of character, because we've gone from a series of lower low, higher low, lower low, higher low, right? We don't get the change of character here. Now all of a sudden I've got a higher low, higher high. So this we get, thus hopefully that makes sense. Here's we swing, we get a higher low, higher low, fails. Now here's the change of character, break of structure. These are little micro swings in here. No, we get a swing and a retrace, swing and retrace, but they don't do anything. There is no reason to identify these other than by your eye, right? Something happened here, the market paused here. So that's not something we would want to ignore necessarily, but note here, it doesn't do anything to make a change. So we're in a series of higher highs, higher low, higher high, higher low. So there's no change of character. The last break of structure is here, so it would have to take out a low, the low down here, to create another break of structure. We don't get that. So while your eye will notice these, and these are not insignificant, they are not a change of character or break of structure. Right. So just a clear distinction. Now we get up here and we get a little choppy towards the top, right? It's very, very typical. We're coming into, the market's been open for about an hour and a half, and now all of a sudden we start to retrace. So note, in the process of that retracement here, I get 1 break of structure, I retrace, and now I get a second break of structure, so I'm currently in a downtrend. a couple of things to note here. You look up here at this high here. Well, I can have both a change of character and a break of structure at the same location. So we have been here in a series of higher highs, higher lows. Now, I get the combination of both a break of structure here because here's the last low that is now giving me a new high. I've had a very minor, it's one tick break of a change of character here. So when I get to a new high here, I've got one change of character followed by a second change of character, but in addition, it's a break of structure, right? So that will happen occasionally where you'll have them on top of each other where both events are happening at once. You see it again down here. So I've got a break of structure and a change of character because the last swing up here was the change of character. Here's the second change of character, but also a break of structure. It's the kind of thing your eye will adapt to it as you see it more and more. It gets easier to follow, just like anything with repetition. Your brain will kind of dial in as, oh, there it is. I understand why. I understand why here, why there. But here, if we look, right, if you think back to our first video, oh, let's see, I can do it this way. So here's the last low here, and here's the high. So if I'm making that distinction between, well, here's the halfway. So here's premium up here, here's discount. We're cutting it in half. So here, now that we've got a couple of floating fibs over here, we'll get into that when we get into the parameters, but it's just kind of a nice eyeball reference as to where we are so you don't lose track. Wait a minute, are we retracing, downtrend, uptrend? 50, golden zone, 786. So those are there just kind of as an additional benefit. Of course, we wouldn't want to necessarily ignore that, and you wouldn't want to ignore things that you already know in the market, but for the time being, we just want to focus on how we're defining swing structure. Right, so now if I go ahead and I turn on the supply and demand zones here, well, let's see, now I'm at 11, a little after 11 o'clock in the morning here on Monday morning. And you'll see a couple of things. So I've got demand zones down below here. There are actually two of them here. Now, they are still on the chart because they have not been broken. One of the things the indicator will do is that if a supply or demand zone is broken along the way, it will fall off the chart. It won't, the indicator will take it off as it's not relevant anymore. So while these have been tapped into down here, they have not been broken, so they remain. Same thing here. It looks like this is about to be checked, and same up here. So they remain on the chart. But we can identify a spot here that might have been an area of interest. If I look over here, this little pullback here, if I bring that over and I go to that high, so here I've got a potential demand zone here that was there based off of this structure. I had a very small, right? It's not enough to create a change of character or a break of structure, but I have a little micro retracement in there. So I come here, some potential, right? Potential zone here. Now from that I get my breaks of structure, change of character. So when the market revisits down here, well, that's not insignificant. I don't want to turn a blind eye to that. And you can see coming off of that, well, you know, what we get? We came back up here. What we ended up with 48 ticks, so $480 a contract here, just on that little push off of this little zone here that's being tapped. So something to keep in mind. But now, if I pull it over, right? Of course, it breaks now. So now we've had a close below, so no longer on the chart. So so you understand why it's not there and why there aren't any on the way up. Right, so now it's kind of the same thing here. You could do the same thing here, right? So we've also got this area, right? Just as we looked at above, we've got this area here that might be of interest as we see the market tapping into it right now. I don't want to ignore this, but again, it's not a change of character, but something paused the market here, right? So it could have been, oh, you know, we have to make a bit of a deduction here. Shorter term traders that caught the push here went into the pre-market high and perhaps a little profit taking there. You know, those are bigger, right? Just at a high there's 53 ticks, right? So these are not insignificant little swings, right? Particularly with the volatility we see in crude. So while it looks small to your eye, it's not an insignificant location on the chart. And then here we pull that off here. Oh, so here's the pre-market high. We just looked at that. So coming back into this area might be, you know, just an area of interest. But we'll circle back to that in a second. But look here, what I want you to focus on is that we've been in this big uptrend, and now we can clearly define the downtrend because we've had multiple breaks of structure. Right here, 1, 2. So I know I've got a downtrend underway here, and now I'm retracing back towards supply zone. So let's bring back our playback here and see if we get a good result here. So this would have certainly been an area of interest. We have, so if you think about some of the things that we talked about in the first video here, you could almost think of it this way, right? So you could say here's a range. Let's get it. We'll draw it up this way here. So here's that kind of range, if you'll recall in the first video, come here, we're kind of premium discount, premium discount, premium discount. Now we get out of here, now we come back, right? So it's, you can draw them across the chart, right? You see it all the time. It's just how much detail do you want to get into. But as we are coming back here, this would certainly be an area of interest for a couple of reasons. One, well, look how fast we came out of here, right? This is boom, straight down, right? I mean, that's a pretty substantial break, and there was serious commitment of shorts to get the market to at least make the break here and come down and put in that pivot low. So as we're retracing, this would be an area of interest. So you can set that up. Let's do it this way. So if I wanted to be my stop on the other side of the zone here, let me get right on that pivot here, and we can take it down here for a good target. So minimum target would right now, as we're retracing here, we have a potential. It's just that currently this is the week low. Now if this retraces, if we go up here and we take out this high now, right? This is no longer the week low, becomes, if we take out this, then we get a break of structure, then we have a strong low. Right now it's the week low, because right now this is the last high that did its job of breaking this low to give me a new low. Right? So you see, as it comes back here, now we have the potential for a trade that's set up there. It's a little over, let's see, we were risking 20 ticks, looking to make a minimum of 76, right? So pretty decent risk reward. I guess we can take that off here. Let's go, 100x is probably just fine here, so we don't belabor this. So let's just let it play, see how the market responds. So we come up, we're into the zone, little pause, we push out of it here. Now we're heading down towards that week low. Let's see if we can get there. And there we go, right? So we get the combination here. So we have, so look what we get here. So first break of structure, change of character, change of character. Now I'm coming all the way back into the supply zone here where I pivot. I'm picking up any orders that might have been here. Of course, I don't break the high. So if you were entering here, and you don't necessarily have to be sitting here with a limit order, you're looking for price action here that's friendly. You could be looking at a footprint chart or whatever it is that you're currently using to help you identify perhaps a change of momentum or bears taking control here. Well, just the risk reward is certainly friendly here, and you have a very clear target, the prior low, right, with the break, right? So we get multiple change of character. So as we come down here, this is, I mean, literally, well, if you think back to the line drawing chart, you recall I showed you a couple of examples where the market's going to be coming back towards that location where you're going to be kind of nervous, thinking, well, I don't know, do I want to be shorting here? This market is rip, higher high, higher low, higher high, higher low. Am I okay selling there? Well, that's, yeah, of course, if we think about risk reward here, where's there better risk reward here, to be a buyer or a seller? All right, of course, it's going to be, and of course we can define that we are currently in a downtrend. So what we're trying to do on this retracement here, even down on the 1 minute, we're trying to get in sync with the current trend, which we know is down. So retrace there, it's not a bad start to the day if that was your first trade of the day. So into that supply zone, and the market comes right out of it here, breaks the low, and now we're back. Again, kind of the same thing. We could be looking down here saying, hey, is that an area I want to be looking at for potentially support here, because this was my last little down from. You get the idea. Now, of course, the other thing is we don't want to forget things that we already know about the market. Let me push that off. So when the market got right here, I mean, again, this should complement what you're doing, not necessarily replace it. So, just grabbing the swing low to the swing high. So what do we do right here? We're just tapping the 50 from that entire swing. So that would be an area of interest. Now we start to put some components together before we're even into supply demand zones here. I mean, these are things that we teach every day and have for years, right? So our auto fibs indicator or measured move indicator would have identified that for you. Here's a way to identify an area of interest. We come to the 50, and there's other things on the chart here, and not to digress into them, but a few things, right? If you're a student of some of our teaching here, some of this will look quite familiar to you. All right, so there's just a classic measured move. So we come into the confluence point. We're hitting the algo target, hitting the 50 on the buy side, and a little pause here in the market. We could think of this as potential. Right? It's always just potential. Potentially a demand zone off of the last down bar here before we head up. Right, possibly a supply zone, unfilled orders waiting to get filled. Pretty good reaction. What comes out of that? Right, we come out of there, we get 82 ticks into the supply zone here. Then we come down. We go further than that. Where do we look? What we do here? We go from one golden zone right to the next golden zone. Right, then the market carries on from there. So there's a basic setup example of exactly how you would want to use it. And here, this would have actually been a failed zone, right? But even though there's a nice trade there, it doesn't give you a break of structure or a change of character. We just get in sync with the downtrend and take it all the way down to a nice target. So the risk reward here very, very friendly. Okay, let me pause there. Again, I'm trying to keep these videos relatively short because they can get, one, I can be long-winded, and two, if I go into all the detail, they'll just be too long. What I'm going to do is try and cut them into bite sizes here. So we might do one trade or one market, look at one or two trade setups, just so you can get a feel for seeing it. You need to see it. You need to understand it. It's not rocket science. So just identifying swing structure here. But if you're new to this, it can take just a little getting used to, just to kind of fine tune your eye into, okay, where are we? Why is that a break of structure? Oh, I got it. Where's the change of character? Okay, where's the current range? Of course, if you were trying to do that without a piece of software, it could be really quite difficult to be sure that you had it just right, which is the advantage of using something like this. So you're not trying to figure that out. Okay, is that a break of structure? Oh, did we break there? Oh, what is that change of character? Yeah, I think you get the idea. This is just infinitely more efficient with regards to identifying that swing structure and where those kind of supply and demand zones may lie on the chart. Right, so let's pause here. I'll come back in the next one. We'll go through the parameters and a few of the choices that you'll have. One in particular I'll spend a little time on, as it's significant, as it will affect the swing structure. So that's where we'll go next, and then we'll dig through the rest of the parameters and some of the nice little features that we've added into this. So with that, we'll pause, and I'll be right back in a second.